For more on the fixed income and equity markets, Alexandra Wilson-Elizondo is here. She's a partner at Goldman Sachs and co-chief investment officer of multi-asset solutions at Goldman Sachs Asset Management. Welcome to you.
Good morning.
Because this kind of gives you a wide view. You can kind of do anything.
I can.
So what are you doing right now? What do you make of all kind of? Are there still dislocations across ASCO from everything that happened in early April?
Yeah. So it's a great question. The most often question I get is, are you more fearful, taking less risk, or is there opportunity in the market? And we're investors. We're always looking for opportunity and the right price for risk. In our view, we're not out of the woods by any means. The news from this last weekend has been materially positive. We've net reduced, tariff rate with China about 115% on both sides.
That already feels like it was 6 months ago.
It does. It does. Especially when we're living in 90-day increments.
Right.
But from our perspective, this is still a double-digit effective tariff rate. It's 5 times greater than it was when we, started this administration, and it's the largest we've seen in 100 years. So ultimately, we're forecasting for a, Q4 to Q4 1% GDP figure with stickier inflation. But there's a lot of opportunity in the markets, and yes, we've seen some repricing.
Where's that? If you're basically saying we still have high tariff rates. We're talking about a 1% growth economy. Where are the opportunities?
Honestly, you've seen a pretty material repricing and volatility. So there's opportunity to put hedges back onto your portfolio. And when we look at the equity market, we do see scope for the market to continue rallying. We probably have seen peak revisions.
Even in a slow growth environment, because we were talking to Rich Bernstein the other day, and he said, earnings were kind of getting peaky. The growth rates are getting peaky. So that doesn't worry you at all?
I mean, but we've revised forward. So now it's going to be, can you outperform a lower effective rate? And by the way, earnings season was very strong. So we continue to start from a very solid base. And, but to your point, we've seen 2 recoveries like this. One was the dot-com bubble, and the other was, post-COVID. Dot-com, you saw, an up-down, retesting the lows, coming back, whereas in COVID you saw, a single upward trajectory. With a tariff rate that's, 5x what it was, could we retest the lows? Yeah, we can. But there's a lot of scope in the near term for, by the way, sentiment to change with financial conditions. We've seen a tremendous amount of retail buying. It's now, 36% of market share. Institutions still haven't necessarily put all their money back to work. So there is a lot of momentum in our minds in the short term, but in the far term, there's a lot that remains to be seen, a lot of execution risk.
Do you think we had a very, very thorough chat about bonds with Gilbert Garcia this morning, and he actually, it's not the most investable thing on the planet, but he likes agency MBS, not so sure about corporate debt, doesn't think rates go much higher from here. I'm just curious if you're a little bit on the cautious side about the economy, if you think that fixed income is attractive, or if you think there's a risk because of tariffs and all that, yields still go higher.
Yeah, so, we see that there's the opportunity for bonds to, test cyclical highs here. When you look at the spend that we're talking about, it's anywhere from a lot to an extreme amount. Yeah. The market has to still digest that supply. But at the same time, we do believe in the best and put, if you will, because the second largest expense for the U.S. economy is interest expense. So it's, right behind Social Security.
But he's not, is he exercising? So we saw the 10-year go to 3.90. We're back up around 4.5%, even after cancel or, kind of pulling things back here. So what more can he do?
So, I think as you talk about tariffs, as you start to get to a place where you can calm the market about supply. By the way, when you pull back tariffs, it's a double-edged sword, right? That's a big part of revenue when you talk about reconciliation and moving forward. So there are different, levers that they're able to pull, and we do believe that the best and put was a big part of why they had the big pivot. But, to your point, I think that there's a psychological level of 5%.
Yeah.
So we still have some space. There's about a 50-bit room there.
Before they break the glass.
Yeah.
And come up with something else.
Yeah.
Rabbit to pull out of their hats.